Good evening, everyone. This is Wayne, and this is the video version of the trade report for Monday, March 26th, 2018, a date that will live in infamy. Today, we saw the Dow go up for its third highest ever point gain. Stay tuned to find out more. Well, hello again, everyone, and I hope everyone had a good weekend. Well, man, what a day in the financial markets. At first, it looked as if we might go a little higher, and then the market began to head to the downside, and it did so with a flourish. But then it went back to the upside with even more of a flourish, and we ended up with a point gain in the Dow that, as I mentioned in the intro, was the third highest point gain ever. Guess how many points higher we went? I'm giving you a little bit of a hint. Yes, 669 points. 669 points in the Dow. These are the kinds of point moves that we saw in 2008. Just because we went up 669 points doesn't mean that we're done going down. This is a very important dynamic to recognize and realize as it relates to the financial markets that we're currently trading in, we're currently finding ourselves embroiled in. One day we have news that moves the market one direction, and seemingly the same news moves the market in the other direction. So the market is still trying to figure itself out. It's still trying to identify its placeholders, its guidelines. It doesn't completely understand exactly what it's supposed to be doing or how it's supposed to be doing it. And so it just reacts. And those reactions are driving, well, it's driving traders crazy, including myself. That being said, at least I have the capability and the knowledge and the wherewithal and the experience to position myself in a way that takes advantage of these moves. And I did so today. But all of that being said, there is a contingent of market participants out there, some of whom I do convene with on a daily basis in a group I belong to. And, you know, there is a certain sense of reliance they have on me for the information and the market protocols that I'm following. But in a market like this, on a day like today, as amazing as a move as this market made today, I am still suspect. I am not convinced that we're not done going down. Yeah, we absolutely crushed it to the upside today. I mean, remarkable moves in every index and in many stocks as well. And if we take a look at the averages, like I said, 669 points in the Dow. The S&P went up 70 points. That's as many points as we lost on Friday. In fact, we're going to look at the chart of the S&P, and I'm going to show you a chart formation that is very interesting. The NASDAQ, I'm not sure if this is an all-time record, but the NASDAQ went up almost 228 points. These are out of control numbers. I mean, when you see a market unleash like this, there are things that are not right in the market. And just because it went up doesn't mean it's okay to see that happen on the upside. There is a certain necessary restraint that is implicit to a normal market. When I say normal, I mean a market that is able to contain itself, to act and not react. Today was a reaction. I don't know to what though. The market had probably to Thursday and Friday's trade, and to the fact that the S&P, as I pointed out on Friday, did touch the 200-day moving average, which I told you in the Friday video, the special report, that will be viewed as a technical signal to buy by a certain contingent of traders. Well, if that's what everybody's hanging their hat on, is the S&P hitting the 200-day moving average, and that's the reason we went up today, I'm a little concerned about the rest of this week. But all of that being said, in no way, shape, or form am I trying to tell you or anyone that I think we're heading down. I just think that a day like today, on the heels of days like last Thursday and last Friday, need to be evaluated and examined for their rather unsteady, uncertain, and unwieldy behavior. So I think I've made myself beyond clear as it relates to how I feel about this. But at the same time, this is the market that we got today, and that's what counts. One of the women in my trading group, um, who shall remain nameless, and that is because she has requested that she remain nameless. Um, she's brilliant. She has collaborated with me and taught me a lot about the Ichimoku cloud indicator. But she issues a daily review first thing in the morning, and she does this. Well, I think it helps her. It's kind of like an early morning review that she likes to write out, but she shares it with our group, and it's priceless. But at the end of every one of these reports, she writes the words, "Trade what you see." And I love that. It is such a amazing reminder that on a daily basis, the market is giving you certain opportunities and certain things you shouldn't view as opportunities, and you need to be able to discern the difference between those things. So on a day like today, where I didn't tell you what the Russell closed up a little over 33.5 points. So, but on a day like today, when coming off of a Thursday and Friday, like last Thursday and Friday, and we're just going to kind of this whole chart out here. So I know you remember what happened those days, and let me bring over my writing tools. I was ready, I just didn't have it on the right screen. So as you recall, Thursday down, and then the overnight slash extended session kind of went down, then up, and we kind of had a fake out move to the upside. Then we went down. Then we really crashed on Friday. And then when the markets opened yesterday, they did open higher, but then they started heading down. And then they went way up. And then they started going down again. And then while I was in bed, they really went higher. And I woke up and the market was up like 35 points. And I thought to myself, okay, what happened? So I looked at the news, nothing. Trade tariffs, no big deal. A few other things, blah, blah, blah. And Facebook still getting, kind of slammed in the news. So we went down into the close, or excuse me, down into the open. And when we opened, we went a little higher. And then we really started selling. And I thought, okay, here we go. And we did test this 1272, which is a Fibonacci level. And it did pierce that level. But that was it. And I jokingly referred to this as the potential for a V bottom on the day. Wow. Who knew that I would be so accurate in my my joking? Well, the market started going higher, kind of flitted around a little bit, went higher, flitted around a little bit, went down a little bit. You can just kind of see how this is developing here. Well, as soon as the market went above the high of the day, which was also above the 786 Fibonacci line. And let me get rid of all these lines here. This is the 786, which is a Fibonacci level. And you can see where in the extended session, 1, 2, 3, and even in the regular session, 4, 5, 6, could not get a close over the 786. And the 786 was a level that came in as a result of measuring it wasn't the daily high, but it was the most recent swing high to the close on Friday. So it was this level right here. I just drew that line. And so that gave me these levels, the 382, the 50%, the 681, sorry, 618. That's why I was kind of sputtering there. And then the 786. Now the 786 is kind of an interesting level. It comes into play after the 50% and the 618 have been gone through, but it acts like more of an area of elasticity rather than resistance. But when it acts as resistance, it's actually just kind of playing with or toying with, if you will, price. So as price was going up and moving lower, up, lower, up, lower, up, lower, just couldn't quite make it through there, and then started heading south and really, really started selling. I thought, okay, so the 786, put up a fight and basically won that fight. And now prices are going to go down, and we're going to revisit the Friday low. Well, as you can see, that never happened. And so as we went up, we came back up to the 786, and as soon as we went above the 786, and we were not retracing from that going above, well, we went above on this candle, and then we came back down and closed below, and then we went up above again. And at that point, I thought, okay, it's time to buy this market. So I sold some S&P futures puts, and I also sold an Amazon put credit spread. I sold the 1500, 1450 put credit spread in Amazon. So I do want to show you Amazon, and I will show you the SPX, the S&P, as it relates to that candlestick chart configuration that I mentioned. That is a very interesting thing for us to review here. Let me just get this back settled here. So I am recording this at 2:10 p.m. Well, about 2 o'clock Pacific Daylight Time. So the market's actually closed, and it will be closed for another 50 minutes. The futures market, that is. The stocks are trading, but we're looking at basically a quiet, non-moving market here at this point. But if we take a look at the S&P, and I want to show you the S&P, and I want to show you Amazon. Another crazy thing about today is all of this bad news about Facebook, and Facebook was down over $9 at one point in today's trading, and where is it? It closed in the green. It closed up 67 cents today. So it's a little unbelievable. So anyway, you can see how Friday's candle, absent of today's candle, really put us in a position where it was, like I said on Friday, it's not a foregone conclusion, although it feels like it, that we'll go lower. And, well, we went lower from where we opened today, but we did not go lower than Friday's low, or Friday's close. In fact, we actually ended above, significantly above Friday's close. And so right now we're at somewhat of an inflection point. We're at the 100% symmetry resistance. So with that in mind, tomorrow is going to be a bit of a test for the market. Now, you're going to hear something from me that's a little bit interesting. I always talk about momentum and sentiment. Momentum is definitely to the upside here. Sentiment is not. We have more of a relief dynamic around this move today than we do a bullish sentiment. This is not the kind of price action that engenders a commitment of traders and market participants to go long. This is more like, oh, thank goodness we didn't go any further down. And I'm so glad that we went higher today. I feel so much better. That's not a sentiment shift. That's like a sigh of relief. And that's the dynamic that's occurring. Not to mention, that is all kind of wrapped up in the bundle of a wow factor too, because of the fact that we closed with so much of a point gain to the upside. So tomorrow will be a test of how we react to today's reaction. So that's the S&P. I do want to show you the Dow. The Dow is where the candlestick chart pattern that I want to show you is that okay, where is that darn? Oh no, it's not. My apologies. It's in the S&P futures. That's right. And I look at so many charts during the day, and my apologies for not making notes about where I wanted to show you what I wanted to show you. And let me just real quick just get rid of these lines because they are no longer necessary. And I'm going to take that one out. Okay, so we almost made it to the 1272, which is the first target, to the upside on this candle. Now the 1272 is a pretty extended move for one day. So the fact that we almost made it there is, one more piece of the puzzle as it relates to this just being somewhat of an overreaction. But it is what it is. Now, what I do want to say though is this candle, today's candle, completely encompasses the body of Friday's candle. Doesn't quite encompass the entirety of the candle, including the wicks, but it does completely encompass the, or shall I say, engulf the body of the candle as well as the upper wick of the candle. And this particular candlestick formation is known as a bullish engulfing. Now, a bullish engulfing, like every candlestick chart pattern, requires confirmation. And you would think with this kind of action that it would be self-confirming. Well, no, there really is no such thing as self-confirming. There are some chart patterns that have higher probabilities of what will happen the next day, and this actually happens to be one of them, but it doesn't necessarily portend anything in particular. So what we're looking for is higher prices tomorrow, just by virtue of the technical dynamic of this chart pattern here, and the fact that we do have momentum moving to the upside. But again, sentiment is not in unison with momentum. So if there are any cracks in sentiment tomorrow, if there's some sort of news that comes down the pike that affects sentiment or reminds market participants that we're still dealing with interest rates going higher, we're still dealing with trade tariffs and the surprises associated with that, even though we're supposedly in communication with the Chinese about how to manage the tariffs, it's still presenting a bit of a bugaboo for the market. So tomorrow is going to be a crapshoot. I think we open higher. I think we may even go higher tomorrow. I think we're really on edge still in the market. I mean, we got a long way to go before this market is anywhere near its all-time high. I mean, that's another about 220 points higher, 225 points higher. That's a lot of points. That's excuse me, that's almost about a 7% gain in this market. So I'm not necessarily convinced that just because we had this day today that we're out of the woods, that everything's fine, that this means that we're going higher now for sure. I'm telling you from a technical perspective that we'll probably go higher tomorrow. We'll probably open higher. We may even go higher, but there is some very, very shaky ground that this move up is on. So that's my my take on that aspect. And I do want to show you Amazon. So I know you all know that Amazon is my favorite chart, my favorite stock, I should say. And it's because it's the market leader. I've mentioned that in the past. And you trade what you know, but you also trade probabilities. And the fact that the market leader went 60 points higher today, I'm not sure if that's the biggest no, it's not the biggest 1 point gain or 1 day gain, excuse me. But I just, well, maybe it is. I don't know. I'm looking. I don't know. We'll have to find out. I did not do that research before I started this video. But you can see where this market, this Amazon market, and every stock has its own market. So I call it the market. So Amazon looked like it was heading down to about 1450, but it slammed on the brakes and threw it into reverse or forward as the case may be, and just went catapulting higher today. And I bought it when it was right about here. I was not convinced it was going higher until the market confirmed that it was. In fact, Amazon actually dipped down below 1500 today, even though it closed at 1555. I got in it when it was at about 1525. So, I'm doing okay in the trade right now. And usually Amazon does open up higher. So, we'll see how it all plays out. The key in any position like the one I have in Amazon, which is a put credit spread, is making sure that you have a good working knowledge of volatility in general, and also the IV rank or the implied volatility rank of the stock options that you're trading, in this case, the options in Amazon. And they're looking pretty good for the position that I have on. So all things being equal, we are looking for a higher open tomorrow. We may even get a significantly higher or a significant push to the upside in the overnight session, because the Asian markets and the European markets oftentimes will take our lead and provide some initial continuation, which we then kind of inherit, if you will, from the overnight session. And we kind of end up with a head start, if you will. I honestly, you can see I'm in kind of a befuddled and stupefied state as it relates to the uh, the sheer, I don't know what you want to call it, the sheerness. How's that? So anyway, every day we do the best we can do with what we have to work with. We can only rely on ourselves, who we are as traders. And today I was thrown for a little bit of a loop, and I'm not ashamed to admit that. It's not something that every trader is able to do. In fact, what I'm trying to say here, not traders are not able to be completely in sync with the market every single day. And it's up to the trader to make the decision whether or not to trade based on how they're perceiving they are engaging or not able to engage with the market. Now, I was doing really, I was in a little bit of a quandary at the open because we were up in the overnight session, but as soon as the market started to drop, that was more in alignment with my original thesis from Friday. So, I was coming back into sync with the market. The other factor is Mondays are always a challenge because you're coming off of a couple of days off. You're coming back into the market from, well, life. The market is a very different environment than, quote unquote, the real world. So as you re-engage with the market, you do have to kind of recalibrate your psyche. And on Mondays, that can present a little bit of a challenge. Obviously, it's not impossible, but you do have to be honest with yourself and say, all right, am I all here? Am I able to engage, and is it okay for me to trade? Well, I was feeling pretty good in the great scheme of things, and I actually did sell some puts down here when the market started heading north. I just did it out of instinct, and I exited them right about here for $1,000, which was a very nice trade. Now, I did that again out of instinct. It wasn't anything associated with a trade thesis. It was me knowing what my risk tolerance is, and having, I guess, the presence of mind to evaluate the market in a way that gave me permission to make that trade due to the potential for this market to retrace off of the lows, given the fact that we'd already bounced off of an area that didn't even come close to Friday's low, let alone February's low. So, and as the market continued north, it was just, it was a head shaker. You just have to sit back and watch her go. So as soon as Amazon got above that, or as soon as the market got above that 786, it was time. So I went ahead and I got in Amazon. So I'm using the broader market as a proxy for Amazon, which is a strategy, and it's something that you do when you're when you're evaluating a trade thesis. So at any rate, that kind of gives you a sense of where I was at today, where I'm at now. Obviously, I might even sound a little bit crazy to some of you. But that is the way my day went. And I did have a decent day in the overall, but it still has me just slightly perplexed, which is fine. I've been here before. I know how to handle it, and I know what I'm looking at, and I know what I'm looking for. And again, coming back to the momentum versus sentiment, market has lots of momentum. The sentiment is very shaky. So anyway, all things being equal, we will be watching this market overnight. We'll see how it trades in the Asian and European sessions. And I am situated, for this market to go higher. I mean, I have to be, because I believe it will be. But in the great scheme of things, I really believe that we're simply in a situation where we could see a down day to the degree that we saw an up day today, tomorrow. So with that, I wish you a good night and good trading.